Thank you for joining me. I'm Alex, and I would like to talk to you about the difference between trading and investing today. And in the general sense, it's more of a speculative approach versus a fairly safe approach. And some people get really annoyed when you say they're trading when they're actually investing, and the opposite actually doesn't happen. Because a lot of the people who think they're trading are also investing, or who think they're investing are just trading. But there's basically six basic types of investors and traders, and these are day traders who trade in and out of stocks sometimes within minutes. So there's a lot of patterns that they look at and graphs and everything to determine whether or not a stock is going to go up or down within the next couple minutes. Generally, you need to have a fairly big portfolio to even try to do this, because you tend to have to pay trading fees whenever you trade into and out of a stock. So if you do that many times an hour, even $5 per trade on a $1,000 portfolio or investment will really ruin any income that you can even dream of getting. So day trading needs a lot of investment capital and or a free broker, but they tend to frown upon day trading. So day traders basically look for patterns in graphs and trade based on that, and they don't even care about the fundamentals of a company or what their earnings are or whatever. They just care about what the graph looks at any given minute, and then they trade based on that. Then you have swing traders who basically see that a stock is gone down quite significantly, and they think that they can buy into that stock, wait until it goes back up, and then sell it again. So we're talking about trading in and out of stocks within hours or sometimes days. The opposite is also true. You can, if a stock has significant gains and there's no good reason for it, you can sometimes buy or you can short sell at the high point and try to buy in at the low point, and get the difference in the graph and in the current high point, or sometimes the week's high point and the low point. So you're always trying to look for fairly significant swings of few percent, and day traders look for much smaller swings than that, and in a very short time frame. And then you have then you can trade earnings. So you buy or sell a stock a few days before the earnings come out and get reported, and you speculate on whether or not that will push the stock up or down, and depending on that you either buy or sell the stock. And the problem with that somewhat is that the current earnings don't really matter to whether or not the stock goes up or down that much. The outlook, short term and long term, matters much more in most cases. So you think that the earnings that will be reported in a few days are really good, so you buy the stocks so that you can sell them after the earnings come out, so that you can make a good amount of money on the difference. And then the earnings come out and they are as good as you thought they were, but the outlook is not as good as people expected it to be, and the stock goes down anyway. So all of these have significant risks, because there's basically no way that anyone can predict with 100% certainty whether or not a stock is going up or down in the short term. And on the other hand, you have the investors, which are dividend investors, which basically look for safe investments that pay dividends to then hold the stock for a really long time and reinvest the dividends into more dividend stocks. Then you have the growth investors, who are looking for stocks that have significant growth, and you're looking to have a stock that trades at a much higher price in the future to then sell the stock at that point and buy a different stock. You're probably also holding the stock for a significant amount of time, but not generally as long as dividend investors. Investing for growth has an outlook of 2-3 years, maybe 5, and after that, or rather every year, you reevaluate the stock and you determine whether or not the current growth is still good enough for you to hold on to that stock or sell it. And then lastly, you have the value investors who are looking into a stock and kind of with the 5-ish year outlook determine whether or not the stock has a good potential for growth or dividend and is a safe stock to invest in, to hold for that long and kind of make a significant amount of money on where the stock is right now, where the stock is in 5 years, and what dividend you make in the meantime. So the value investing thing is kind of what Warren Buffett and Benjamin Graham are always preaching to, where you do the complete analysis of a stock and you determine whether or not the stock or the underlying company, not even the stock, you basically don't look at the stock, you look at the underlying company and you try to determine where the company is going in the next 5-ish years. Or Warren Buffett has a even longer term outlook. He kind of tries to look at what the stock will do going towards infinity in the time frame. So if in the next 50, 100, 1,000 years the stock is going to be a good investment and is returning much more than any other stock, he's going to buy the stock. And if it's not, he will just not buy the stock. So that is kind of, strangely enough, almost in the right order, the short to long term trading and investing, intraday trading, swing trading, earnings trading, and then investing for growth. It has a shorter term outlook than investing for dividend and investing for value. I would assume that the dividend investor actually has the longest outlook because they're trying to hold the stock basically forever. That's always the best case scenario, but if you have a stock that's continually raising their dividend and is always having a good safe principle, raising dividends, raising company value, then obviously that's a stock that you don't want to sell, and you just hope that all that continues forever, basically. So that's all the types of trading and investing that you can do. I try to always invest. I don't try to make money on the downswings because I just don't think there's much value in that. Over the long term, the stock market is going to go up, so I don't think that I need to worry about making money while the stock market is going down. That's it for today. If you like this video and you like to watch more videos like this, I'm coming out with more videos every day before market open, so make sure to subscribe if you like that. I hope you have a successful day.